Good afternoon, I'm Jeanne Yurman with TheStreet, and I'm standing here with Ben Willis. He's the managing director of Albert Fried. Good afternoon.
Good afternoon.
Nice to see you. Okay, so today we have GDP, our first read on the first quarter growth, and it came in at 2.5%, well short of the 3% forecast. The biggest miss since September of 2011, and yet the markets have kind of yawned. One industry website put it as the markets are comfortably numb. Do you feel like breaking out into a Pink Floyd song, or what's your take?
Just another brick in the wall. I think the 2.5, if you want to, this market has been viewing everything in a positive light. So while we were expecting 3%, 2.5% is still a much better increase over the last quarter. So that being said, you can still have the argument that the glass is half full, not only in the U.S. economy, but the world economy. And that being said, that's the justification for money to continue to flow into equity funds.
Okay, so kind of segueing into like the S&P 500 specifically, this week it's been touching its all-time high in intraday trading, and it's been higher every single day of the week.
It's been a very tough trend. Most professionals you will talk to will tell you that they're looking for a pullback, somewhere around 5%, and even greater pullback as we continue to go through these new highs. But the fact of the matter is the money coming into the marketplace, they're calling it the TINA, there is no other alternative to investment. So the equities are benefiting from the fact that we may not be in the best shape, but compared to everybody else, we're in great shape, so this is where the money's coming to.
Do you think that's why we've been able to sidestep the spring swoon that everybody was so afraid of 2 weeks ago?
For now. But it's not quite May. You know, the old saying, sell in May and go away. So we'll see what happens on May Day. But yes, that's been part of what's been going on. The dynamic of the world is the fact that we have stopped getting worse. We're not getting better as quickly as we'd like the GDP today, up 2.5. It's still an up read. China, up to 7.7%. That's a luxury problem to have that didn't make 8, isn't it? 7.7% is a pretty good number. So that's what the markets have been digesting around the world. And once again, the glass has stopped going down, so it's time to get into equities.
Okay. A couple last questions. S&P 500 earnings, we've heard from about half of the companies so far. Almost 70% seem to be beating earnings estimates, which is a little bit above average, but revenues are coming in pretty soft. Thoughts?
That's a good example of why we're seeing the jobless numbers the way we're seeing them, why we're seeing they're not quite as where they need to be in a recovery. We're still at over 7% on unemployment rate because those numbers are being met by cost reductions. So that's part and parcel of the bigger picture of what's going on. So the revenue number is an important number to see grow for the overall health, but they're beating their numbers nonetheless. But you have to also understand there was a much lowered expectation of earnings. It's a classic situation when we start out here and those that have the knowledge or supposed to have the knowledge keep lowering their expectations. So the bar is a little low to jump over. Even I could jump over some of them.
You got a nice vertical, huh? Okay, turning to next week, we're still going to get a boatload of earnings. What else might you be looking for?
Jobs. Starts with the ADP number. A lot of people like to discount, but I should say a lot of economists like to discount the ADP number. I personally liked it for an overall indication because it's the private payroll, because of the sources that it comes from. I think it's a much better number than the BLS number, which tends to be BS, quite frankly. So that being said, we'll get the ADP as usually our first hint, and then we'll see what happens on Friday when the government gets to tell us their particular view of the birth-death rate model in particular. And
lastly, I know that you're a football fan. Yes. You've been kind of keeping one eye on the first-round draft picks for the NFL. What do you think so far?
Well, I'm an offensive lineman, as you might have been able to guess. I was not the guy carrying the ball. So I love the fact that the world is starting to come around. I had discussions with the colleagues down here that they don't understand why the offensive line or the offensive tackle, the right guard, the right tackle. The fact of the matter is some of the highest paid guys in the field now in professional football are the offensive line, particularly the left tackle. So this is fun for me to try and explain to people why guys like me are important to keep the guys that they throw the ball pretty.
You're a key player no matter what. There you go. That's Ben Willis. He's with Albert Fried. I'm Jeanne Yurman for TheStreet.